All right. I hope everyone can hear me here. Sorry about the delay, everyone. I apologize. Uh, Hope everyone's having a good day. One second here. All right. So we are going to first go over the lesson today, which is sorry if I seem tired. Just been doing a lot. Santa rally not being real. So, I'm not sure if many of you know what the Santa Rally is, but basically it's a term that's tossed around. Basically, it's supposed to be uh, sort of a run in the market towards the last 2 months. The idea is that since spending and consumerism go up due to the holidays, the market does really well and goes up. Um, that's pretty much some of it. That mainly people like to focus on is companies that make toys, gift cards. Just think about the things you tend to buy people during the holidays. And at first glance, it does seem like a logical idea, right? I mean, with holidays comes spending, and with spending comes consumerism, and with consumerism, that usually does really well for the market. Um, However, if you take a more zoomed out glance at things, it seems that it's more of a self fulfilling prophecy rather than an actual event. And actually, more often than not, there isn't really any rally that happens. So, first, let's look at the data, right? So if we look at the S&P 500, since 1999 all the way to 2021, there was 14 uh times the market went down during the Santa rally event. So, um, that's 14 times over the last 22 years, which you would at least hope with something like that. It's at least half of the time, but unfortunately, that's more than half of these supposed Santa Claus rallies aren't even resulting in profits for the overall market. And then if we look, there are one, two, three, four, five out of the 22 years that resulted in any higher gain than 1%. So it kind of is obvious that the Santa rally is more of a self fulfilling prophecy in the sense that people expect the market to go up, so they'll find areas where the market is going up, and then when they make profit in those specific areas, whether it's a sector, an industry, a specific stock, they say, "Oh, it's a Santa Claus rally." But I, the data is very clear that this is not a Santa Claus rally. Um, and more often than not, these quote unquote rallies end up for an all overall loss for the entire market, which isn't very desirable, obviously, if you're an investor uh, looking to trade into the Santa Claus rally. Many other seasonal patterns too that people tend to point at. That's essentially what the Santa rally is supposed to be, is a seasonal pattern. Many other seasonal patterns tend to happen more than half the time, right? That's why they're seasonal patterns. Usually they happen a good 70-80% of the time. But again, the Santa rally isn't really that profitable in the long term sense of the overall market. Um, so, with that in mind, does anyone have any questions? What's a self-fulfilling prophecy? So, a self-fulfilling prophecy is like I was saying, someone thinks it's going to happen, so they find areas where it is happening, and then um, they take that as evidence that it is happening without looking at the overall picture. Think about it as like stereotypes, right? Stereotypes aren't really a real thing, but with people who believe in them will see them happening in specific circumstances and then say, oh, it's because of X, Y, and Z, when really it isn't. Yeah, there are a lot of examples. I mean, you can just Google self-fulfilling prophecies or self-fulfilling biases, and there's tons of examples. Um, does anyone else have any questions about the Santa Rally lesson? All right. So I think since that's good, we will look at upcoming events and earnings and such. All right. So, if we look at the Buffett indicator right now, we're still looking at an over valued market currently. So, it's not too overvalued, but we're over +1 on the standard deviation. So, do keep in mind that. It's not necessarily saying that the market will be bearish here soon, but it is saying just keep in mind that that's there. Does say that the market is a little bit overvalued currently. Um, Upcoming market events, we have building permits coming out Tuesday, December 19th. So, building permits is the number of building permits issued for November. It measures the change in new buildings issued by the government. It's a key indicator for the housing market, and the housing market is a large majority of the overall U.S. economy. Higher than expected building permits is bullish, lower than expected is bearish. It rose by 1.8% seasonally adjusted for October of 2023. Um, which is compared to the estimate of 1.48%. So we got a little rise there. However, it's still below the 10-month high that we saw in August. So it's good to keep that in mind. Again, if that's higher than expected, we could see a nice increase in the value of lots of the housing market. We also have housing starts coming out that same day, Tuesday, December 19th. Housing starts measures the change in annual's number of new residential buildings that began construction. Okay, so these are the buildings. The previous one was just permits issued for buildings. This one is the actual amount of buildings that have started construction. Higher than expected housing starts is bullish. Lower than expected housing starts is bearish. Housing starts in the U.S. have risen 1.9% month over month when seasonally adjusted. Um, the single family housing starts went up by 0.2%, and housing starts of units in buildings with five or more surged by 4.9%. So that's definitely good to keep in mind. That essentially means that we're seeing lots of kind of apartments and things like that being built, whereas single family houses aren't really being built as much. If you think of the overall currently how the housing market is going and real estate in general, kind of makes sense. Not a whole lot of people are buying houses right now, so you're naturally going to see a decline in many of those family homes being built and more apartment kind of buildings and hotels being built. Um, so both of those are happening Tuesday on the 19th. On Wednesday, the 20th, we have the existing home sales coming out. It measures the change in annualized number of existing residential buildings that are being sold. So this one's the housing market's going to be having a lot around it coming out this next week. Higher than expected home sales is bullish, lower than expected home sales is bearish. Sales of previously owned homes in the US sank 4.1% month over month when seasonally adjusted, and it's at the lowest level it's been since August of 2010. So, as you can tell, that's not necessarily, and again, like I just talked about before, it kind of makes sense seeing how the housing market and real estate market is going right now. It's not really in such a good shape. Lots of people aren't buying many homes, and as a result, you're definitely seeing that drop off. So, could be really good. The other two will definitely have an effect on the housing market, but that one on Wednesday, existing home sales, can really make a difference that could make or break the housing market. Um, Especially if it's higher than expected, you could definitely see a surge in real estate going up. On Thursday, the 21st, we have the GDP growth rate coming out. It's going to be huge for the market. The GDP, the annualized change in inflation adjusted value of all goods and services produced by the economy. It's a key indicator of the economy's overall health. Higher than expected GDP growth is bullish. Lower than expected GDP growth is bearish. The U.S. economy expanded an annualized 5.2% in quarter three of 2023, higher than the 4.9% that was estimated in the forecast of 5%. It marks the strongest growth since quarter four of 2021. So that's definitely something to keep in mind. The housing market and such are doing pretty bad, but the overall economy is still increasing in value. This shows that we are starting to recover from the whole panic and the housing market causing all these weird issues and also inflation. Right? If we keep seeing this GDP growth rate going higher, we can expect um, inflation to come down a bit, and that will, as a result, help the economy grow even more because then people are spending more. We could also see um, that the higher the GDP growth rate goes, that the uh, um, FDA will stop, or sorry, not the FDA, the FED will stop with their hikes in rates. Oh no, I didn't get a chance to set up OBS, so my screen isn't currently showing anything. Next week though, I will be able to set all that up and hopefully have something um, for you guys to look at. Sorry about that. Um, I know it's kind of boring just staring at a black screen, but unfortunately, with the short time period I had in trying to get this out with everything else going on, it's about the best I can do right now. Um, durable goods. Durable goods is coming out on Friday. Durable goods measures the change in total value of new orders for long lasting manufactured goods and transportation items. Higher than expected durable goods orders is bullish, lower than expected durable goods is bearish. If you need an idea about durable goods, just think about anything that you buy that isn't like a one time use thing. So, like clothes, electronics, um, any like decor, uh, utilities, or um, not like utilities as in your power and stuff, but utilities as in like tools and things like that. Um, cups, plates, all that kind of thing. Um, so durable goods, new orders for manufactured durable goods in the United States plummeted by 5.4% month over month in October of 2023, revising a 4.0% surge seen in September. So we saw a nice surge in September, and then we had a drop that went even lower than that surge in the next month in October. It was the second largest fall in durable goods since April of 2020. So that's something to keep in mind. Um, we definitely need people buying durable goods. It's a good indication of the consumer market, right? Lots of people are buying durable goods. That's really good for the market and shows that we're spending a lot. Non-durable goods are could be an indication of consumerism, but it's not as good nor has as much of an effect, right? Because everyone's I mean, non-durable goods get bought all the time, right? Single-use items, they get bought all the time. Maybe it could just be the like a one-time use thing. So that number kind of fluctuates a lot, whereas durable goods is always a good indication of stability in consumer spending. On that same day, Friday, we have personal income coming out. So, personal income, the change in personal income, it's forecasted to be 0.4%. The previous was 0.2%. So, that's a nice increase there. It measures the total value of income received from all sources by consumers. So, not not thinking just of like people's checks at their job, but this also includes people making income from side jobs, people making income from like the stock market or other investments. These are all sources of income. Higher than expected personal income is bullish, lower than expected personal income is bearish. We saw an increase of 0.2% month over month in October, the least in 4 months. However, it was matching market forecasts. So it wasn't unexpected. It wasn't necessarily bearish. It was more just kind of stagnant. Um, a slowdown was seen in compensation for employees in September, driven by both wages and salaries and other associated costs. So, personal income is definitely something to keep a lookout for. Personal income can gauge what we're expecting to see later, right, towards this end of the year, once all these companies that deal with consumerism and just the overall market, right, between the GDP growth rate, the personal income, and I'll get to personal spending here in a sec, and durable goods, between those four, you can make a pretty good prediction on how the economy and the overall market is going to be at the end of this year as well as going into the next year. So, personal spending is also coming out on Friday. Uh, Personal spending. Um, oh, thank you. Thank you, Daniel. Uh, I appreciate it. Personal spending comes out on Friday. It's the change in overall spending when inflation adjusted. So higher than expected personal spending is bullish, lower than expected personal spending is bearish. We saw a 0.2% rise from the month earlier in October, following a zero point 0.7 increase in September, which was matching market forecasts. So it wasn't, again, necessarily bearish, it was more just stagnant. Um, we've seen the smallest advance in the last 5 months since 2020. So it's not looking too good on the personal spending outcome. But again, we could just see another market expectation of 0.2%, which would just leave it stagnant and not have that much of an effect on the overall market. But considering things that are going on right now, really never know. The market's kind of in this gray area where everything's just happening. So those are the upcoming market events. Again, building permits and housing starts on Tuesday, existing home sales on Wednesday, GDP growth rate on Thursday, and then we have durable goods, personal income, personal spending on Friday. The fear and greed index is at 67 right now compared to the 65 we saw 1 week ago. Again, we're seeing a slight increase in greed, which is pretty good for the market. Um, it tells us that people are investing a lot right now, whether it's stocks or real estate or other areas of investments. It also tells us that people are buying a lot right now. Um, so it's a good time to keep a lookout for your stocks, find good companies. It honestly depends. Well, I shouldn't say that because it honestly depends. Some people like to buy during greed. Some people like to buy when we're more towards fear. So it honestly depends on your personal preference. But yeah, greed is good. It means that the U.S. market is going up overall. Um, the mergers and acquisitions, haven't really seen too many mergers or acquisitions since last time we looked at it. Not really that much. We see Blackstone is buying Rover Group. So that's one that could be pretty interesting. We also see Alaska Airlines is buying Hawaiian Airlines. So that's also an interesting move for them. But besides that, not really too many. I don't know if any of you remembered me talking about AbbVie last week, but they're buying another therapeutic company, so that's something to look out for. But overall, yet we haven't really seen too many big mergers or acquisitions since that Airbnb and Smuckers move. Um, so yeah, the momentum, uh, the U.S. Momentum Factor ETF. It's a good indication of the market's overall momentum. We've seen a rise since last week of about 2.4%. So that's pretty good. It shows that momentum is still rising in the U.S. market, um, which is up. We got a total of 3% up from last month and a total of 7% year to date. So we're doing pretty good on the overall momentum of the market. Between that and the fear and greed index, I'd say we still got some uh, momentum here left in the market overall to keep increasing, but you never know, right? It's hard to predict things like that just looking at a couple factors. So, and then earnings this week ahead. So we got some pretty interesting earnings coming up here. A few that I like to keep out for. On the 18th, HEI uh, is scheduled to report quarter four earnings after market closes on Monday, and analysts are forecasting an insane 48% growth in revenue for the company. That is wild. All right. That's nearly the company doubling its revenue, or not doubling, sorry, but 50% increase is still pretty insane. Despite expectations of a year-over-year dip in earnings per share, the stock is still rated a buy by most analysts. So very interesting what could happen with this company. EPS estimates are 0.69. Consensus revenue estimates are 899.05 million. The company has beaten revenue estimates in 7 out of the 8 past quarters and EPS estimates in 6 of those same quarters. So definitely a company to look out for. Um, you could play on just expectation since this earnings report is coming out after the market closes on Monday, but that's honestly up to you. If they do have that growth rate in revenue, you could definitely be expecting this market to jump, or this stock to jump up pretty high. Although on the flip side of that, that also means if they don't hit that growth in revenue, it could mean a pretty severe decline for the stock as well. On Tuesday, we have FDX or FedEx. Most people know FedEx. It's kind of like UPS, for it's a shipping company. Um, so a lot of analysts are expecting bullish sentiments for FDX, citing factors such as earnings and dividend growth, undervaluation, and consistent outperformance against the S&P 500. So it's kind of one of those overlooked stocks. Not a lot of people think, "Oh, I should, invest in FedEx," but it's been it's been pretty consistent with beating the market. It, uh, I mean, what more can you want, right? The market anticipates an annual earnings growth rate of over 15% with a PEG ratio of 1.07 and a PE of around 14.2. So, there's also um, DVAS research. They've argued that this growth rate exceeds historical levels and lacks robust growth drivers. So they're kind of not necessarily saying it's bearish, but they're saying that it's a pretty large climb in growth rate. So just be on the lookout because, in their opinion, there aren't that many uh, growth drivers or like things that FedEx can grow on to increase the value of the company. Consensus EPS estimates are 4.2. Consensus revenue estimates are 22.42 billion. FedEx has beaten EPS estimates in 5 of the 8 past quarters, rising above revenue expectations in 2 of those same quarters. So definitely keep a lookout for FedEx on Tuesday. That's going to be a pretty interesting move. On Wednesday, we have Micron or MU. They're set to release its quarter one earnings print after the closing bell on Wednesday. In an update in late November, the company revised its quarter one's outlook upward, attributing improvement in enhanced supply and demand. So that's pretty interesting to keep an eye out on. The company itself says that they have an outlook of increasing in value and growth. The stock continues to be a buy recommendation from most analysts. Um, th- the Envision Research Group, yeah, Envision, said that Micron's valuations have become ahead of the fundamentals with an overall optimistic growth projections. EPS estimates are negative 1.02. Revenue estimates are 4.62 billion. Micron has beaten EPS estimates in 6 of the past 8 quarters and revenue estimates in 4 of those same quarters. So overall, we're seeing a pretty good increase from Micron here. Definitely could be a pretty good earnings play with all the bullish sentiment and not really that much bearish outlook on the company, whether it's investors, research groups, analysts, or the company themselves. So definitely one to keep an eye out on there. On Thursday, we have Nike and KE. They're scheduled to post their quarter 2 results on Thursday after the closing bell, um, which will end one of the company's strongest quarters. So, so far, it's looking pretty good for Nike. Um, Despite a lot of people's optimism, whether it's analysts, investors, etc., the overall rating for Nike is still a hold. So, not necessarily buy, but not really a sell either. Um, Essay author Luko Saki, sorry if I'm saying that wrong, but he said that Nike is a fact, a stock with some volatility, and does provide dips that create compelling buy opportunities. So, we could see a dip coming up. We could see a rise, but even if we see that dip, most people agree that it's a good buy opportunity in Nike for it to keep increasing. EPS estimates are 0.85. Consensus revenue estimates are 13.41 billion. The company has beaten EPS and revenue estimates 7 times in the past 8 quarters. So overall, really good company. Could be a nice earnings play. Definitely, my personal opinion is bullish, but you never know, especially when this company has so many mixed results and opinions. Also, on that same day, on Thursday, we have Carnival CCL. They're releasing their quarter 4 earnings on Thursday. So, nice one to keep a lookout for. Their stock price has doubled this year, obviously surpassing the S&P 500's performance, and their revenues have nearly returned to pre-pandemic levels already. So, definitely a company that's coming back and kicking, taking uh, its bullish sentiment is pretty obvious. They've nearly made a full recovery from the pandemic levels, which most companies still haven't. Their performance was driven by pent up demand, strong bookings, improved financials, and it's a strong buy overall from most analysts. The EPS estimates are negative 0.13 and revenue estimates are 5.27 billion. The company has beaten EPS estimates in 3 of the past 8 quarters and revenue estimates in 2 of those. So not necessarily the biggest track record, but um, when it comes to beating estimates, but it's still overall doing insanely well, right? Personally, people have just, in my opinion, overestimating, right? And then they see, oh, this company has nearly doubled this year, and then give some really high estimates on its upcoming EPS and revenue. And then when it falls short of those estimates, it's not necessarily bearish, it's just people giving really large estimates. So those are the companies I'm going to be looking out for this week. There's still lots of companies giving out earnings this week. By no means are those the only ones coming out. We have lots of other companies coming out with earnings like General Mills, BlackBerry, Steelcase, lots of other pretty big names, CarMax. Those are just the ones I'm going to be keeping a lookout for, given their track record with earnings and just overall how they've been doing in the market lately. Um, so that's about it for this week's stock hour. Does anyone have any questions or anything they want to say in the chat? Feel free to put it now. All right. Oh, yeah, definitely, Daniel. I hope you learned a lot. Again, sorry I couldn't really show my screen this stock hour, but next stock hour I'll have OBS and everything set up, so it'll definitely look a lot better. I definitely think YouTube Live is the way to go. Lots of people can access it from every Discord group I'm in, and it's pretty easy to watch. Don't really need another program or anything. You can do it through the website. Most people have the YouTube app, etc. So, with that being said, I'm gonna end the stock hour. If anyone has any other questions, feel free to just tag me in whichever Discord group you're in that I'm in. I'm more than willing to ask, or sorry, more than willing to answer any questions that you have. I hope you all have a good rest of your day, and let's hopefully make some money this week. Have a good one.